welcome to Saxo's Macro Insights channel, which aims to bring you a variety of perspectives to help you with your trading and investment journeys. I'm Charu Chanana, a market strategist with Saxo Singapore, and in this video, I will be talking about the potential for emerging and particularly Asian markets to outperform in 2023. We believe the single biggest pivot of 2023 is the China reopening. So now we are looking at expectations for 2023 being completely tangential to what actually happened in 2022. In 2022, we had US growth outpacing China, while China was mired not just in zero COVID lockdowns, but also a slowdown of its property sector, a crackdown on internet companies, and we had negative after negative news flowing out of China most of the time. At the same time, we had high levels of global inflation, which prompted many central banks to hike rates aggressively. And lastly, we had the US dollar rising, which is a big headwind to Asian assets in particular, but also more broadly for EM assets. All of these global trends weighed heavily on emerging markets assets in 2022, and Asian assets also suffered along with that. Nonetheless, we had some outperformers in Asia, and Asian markets have coped much better with the Fed's tightening cycle this time compared to the previous tightening cycles because of significantly improved fundamentals. But the tide is turning at the start of 2023. China has pivoted away from zero COVID faster than expected, and it is now trying to fire up all of its economic levers to revive growth. It looks like China can end this year much stronger than the US on a relative and absolute basis, and much stronger than what most had expected. Global inflation has peaked. It is still a question on how low it can go and whether we can really get back to the expected 2% kind of levels for most developed market economies, but it does look like we are past the worst of inflation for now, and central banks are slowing down their tightening. Again, we don't think the Fed will cut rates this year, but a pause looks imminent for now. Second half of the year, that will be a different question. It will be a different story. If we see inflation coming back higher, like the 1970s or the 1980s, the Fed may have to change its course once again. But for now, we can take some relief. We also have the US dollar weakening, which takes a lot of pressure off Asian FX particularly. And to top it all up, we still have most Asian markets trading at a discount to its global peers. As you can see here on this slide, the chart on the left is the PE for S&P 500, and the one on the right is the PE of MSCI Asia Pacific. The horizontal lines in both the charts signal averages of the last 10 years. So as you can see here, the current PE of MSCI Asia Pacific is at a much larger discount from its 10-year average, compared to the current PE of S&P 500, which is quite close to its 10-year average. So because of all this, Asian markets have enjoyed a positive start to 2023. Not to mention, there is always a lot of risk for emerging markets coming from politics, geopolitics, and lots more. So when you invest in emerging markets, you really have to take all of that into account. But right now, we can spot a few countries in Asia that have the potential to deliver a relatively better performance in 2023. I've listed some of the key factors to consider for the major Asian economies here on the right. For instance, for South Korea, the upswing in the semiconductor cycle should underpin. Japan markets have been weighed down this year because of speculation around Bank of Japan's policy tweaks. But there are still a few bright spots to consider, such as they are increasing their defense spending massively. They have a lot of focus on energy security as well. And banks have also been doing well this year amid that expectation of shifts in monetary policy. If you look at Taiwan, it enjoys a huge geopolitical discount. Indonesia has been one of the outperformers last year, and it continues to be positioned well this year as well due to its large mineral and metal reserves. It is a key supplier of many metals such as lithium, nickel, and copper. And these will be relevant in 2023, not just because of China's reopening, but also as the global economies set forward on the path of green transformation. Vietnam has been one of the key winners of the China Plus One strategy of diversification of manufacturing supply chains, But judging from some very recent headlines, there is likely to be some political noise this year. India, meanwhile, continues to enjoy a strong demographic advantage, and it is also pushing forward on attracting businesses. But it is relatively expensive now from a valuation perspective. So just to summarize, things are looking up for Asian equities in 2023, both from a fundamental and a valuation perspective. It is important to note that there will be divergence within the region. But overall, there is strong breadth in the outperformance, and it is also supported by improving Asian FX. Well, that is all for today. We hope you enjoyed this video, and we wish you great success in your trading and investing journeys. Stay tuned for more macro insights from us here at Saxo.